Market set to open higher after a big sell-off last week. That's coming up on 3 Minutes on Markets and Money. Last week, the markets continued to sell off under pressure following Jerome Powell's speech following Jackson Hole, suggesting that more rate hikes are coming and much more aggressive at that. That caused markets to sell off, not only breaking the 50-day moving average, but moved markets back down into fairly deep oversold territory. Then on Friday, had a little bit of a bounce. Markets challenged the 50-day moving average from underneath. Now, that previous support, now resistance for the markets. Markets challenged that on Friday, and just about at the moment, they're trying to break above the 50-day and kind of reclaim that support. Russia comes out and says they're halting natural gas to Europe entirely, causing the markets to sell off to the lows for the day. Now, this morning, futures are pointing higher, looking to get a little bit of a rally here again. Markets are oversold here, so a bit of a rally, not surprising, particularly after the sell-off that we've had really since the peak of the market just a couple of weeks ago. Been pretty brutal here. We've already given up more than 50% of that gain. As markets rally here, again, continue to sell rallies at the moment because we still have sell signals in place, and those are not at a point just yet that they're beginning to show some signs that they're trying to start to turn. And we may get a little bit of that today, we'll see. But very likely right now, we've got a very important resistance level at the 50-day moving average. The 20-day is starting to point back down now. That's going to apply downward pressure on stocks, at least temporarily. So with the sell signals in place, sell rallies momentarily until we start to get a little bit better technical action. So again, just be a little cautious with portfolio allocations. Jumping over into oil prices, over the weekend, OPEC announced that they're going to cut production by 100,000 barrels a day. We now know the half-life of a Biden fist bump. Just 2 months ago, Joe Biden fist bumped the Prince of Saudi Arabia, agreeing to no production cuts. Well, that didn't last very long. 2 months later, here we are with a production cut. Not surprising here to see OPEC do this. Oil prices are sitting on pretty important support, kind of going back to these previous tops that we saw in 2021, also along kind of these bottoms that we had earlier this year. Oil prices have been under pressure here as of late, so seeing them cut production here, not surprising at all. They like higher oil prices. Energy companies like higher oil prices in general. We also have the moving averages beginning to have some negative connotations here as well, suggesting more downward pressure on oil prices near term. However, oil prices are very oversold here, and we are on some short-term kind of sell signals, but they're fairly depressed levels. So again, not surprising if we see a little bit of a rally here back towards $95 to $98 on oil prices. If we get there, that'll probably be a decent sellable rally for energy shares. So again, look, kind of take some profits out of those positions. Clearly, as we try to reduce the demand, and this is what's going on with the Federal Reserve, the whole point of the Fed hiking rates is to reduce demand, slow economic growth. That's going to continue to kind of keep oil prices in this downward trend. So again, just manage your oil and energy exposures carefully here as we go. There's some good opportunities here, I think, for a short-term rally, but that should, like the markets, kind of be sold into as well. I'm Lance Roberts for 3 Minutes on Markets and Money. See you back here tomorrow.